Amit Nigam, Head Equity at Peerless Mutual Fund as well, joins in to talk about his thoughts on the markets as well as various sectors and stocks. Amit, hi afternoon. Today all focus is on Reliance Industries. Do you think something core to the petroleum business is going to be what one can expect from Bob Dudley and Mukesh Ambani when they hold the press conference this evening?
Good afternoon. Unfortunately, it will be difficult for me to comment on any company specific, Aisha. So maybe I'll give it a pass to this question.
Sure, not a problem. Let's talk about the market. What's going on? We've been consolidating for quite a few days. While of course Reliance is doing its bit, a nice smart turnaround seems to be playing out within the pharma sector. How are you at Peerless positioning yourself in pharma? Do you think it's time to nibble in if one is out of the sector for now?
Sure, so you're right. There were two questions. A, we are definitely seeing the markets kind of consolidate at higher levels. We last time discussed that how the markets currently are trading at much higher valuations to our comfort. But within the markets, we find two sectors, so IT and pharma, which are actually trading much lower than their earlier prices and definitely softer valuations. Now when we look at any sector stroke company, we typically look at much longer term horizon. Even when we are evaluating companies which have been in existence for long, for the last at least 10 to 15 years, cash flows, profitability. Both these sectors have ample tick marks on both these parameters. So therefore what becomes important is the outlook. So pharma, the way we have been evaluating is that the amount of challenges which were there for this sector over the last almost 18 to 24 months is what is getting manifested today. And please remember, this is again not a sector specific thing, because there are certain companies which are today within the sector trading at almost their 52-week highs. So it's a very company specific sector where we have to be very clear as to what kind of medicine portfolio we are buying, what kind of geographical portfolio we are buying, and accordingly we will have a look at those specific companies. Now since the stocks have corrected so much, therefore they definitely make a place for us to have a closer look, but as of now on our positioning we are underweight on this sector.
Okay, Amit, I want to talk to you about what you as well have been talking about, the shift from unorganized to organized, FMCG, a few categories that do have a lot of unorganized presence rather. That is something that you believe will stand to benefit. But of course the key risk out here is if that the organized players do nudge the line, like you have been saying. Which categories you think will not be able to take advantage? Because it's a very well established fact that organized players will stand to benefit, but where do you think organized players are at most risk?
So now one thing which is amply clear is that GST is happening. It's happening from 1st of July. So what we have analyzed after meeting several corporates, especially over the last week where we had a couple of conferences happening, is that the sectors where the unorganized has already been pushed out. So there are certain categories where the organized sector would already be like, let's say 75 to 80%. There it doesn't offer too much of a headroom for the organized players to gain market share. What other fact we have realized is that within the unorganized sector there are clearly two sets of players who operate. One who are decently large and who would be ready to adopt the systems as and how it is required under GST, and therefore become almost like an organized player. Now these are the players who would definitely try and protect their turf. They would definitely have to upgrade their product, because now the consumer has an option to buy a product which is branded, or let's say which is being supplied by an organized guy, and there is no cheaper option. So therefore the chances to buy the product from a reputed, respected guy is higher than risk something which is not available at too much of a discount. The second set of unorganized players would be those who were not in the
Taxation tariffs are multiple.
But Amit, you were making the point about this entire shift that post GST one is going to see from the unorganized to organized players and what's likely to benefit.
Yes. So as I was mentioning, there is a second set of people in the unorganized sector who were there just to make the short-term profit by avoiding paying taxes. Now that is a segment clearly which to our understanding would get out of the business, and that is the opportunity available for the organized players to gain market share. And this would help them not only in growing sales incrementally, but also help them gain profitability, because with better market share you get better cost structures, and for the same pricing you can have higher profits. So we believe that with GST happening in the short term, there may be some pains wherein the implementation may cause disruptions to the business, but over medium to long term I think it's going to be an exciting opportunity for corporates, especially in the organized sector, where they have an opportunity to gain market shares as well as profitability.
The telecom industry stakeholders and telecom service providers 2.5 hour meeting, and we had requested each of them to present their their thoughts and ideas of not only the diagnosis of the issue which they are facing, but also the remedial measures which should be taken, and specifically with reference to TRAI's role, what TRAI could do and contribute to the issue at hand. This is the broad agenda of the meeting.